Good afternoon, everyone. Thank you for joining our webinar today. Today's topic is Understanding Your Cyber Insurance Coverage, Part 1. Today's presentation will be hosted by myself, Cassie Turner, as well as Kathy Bryant, and we're joined by our special guest speaker today, John Southrey. We'd like to let you know also that this presentation is being recorded and you will receive a link after it is over today so that you can access it again at a later time if you'd like to do so. You can also feel free to share it with others. Before we begin, we have a little disclaimer here for you to take a look at, just so that you know that this is just resource materials, that this is not a legal resource for you to refer to. So before we get started, we have a polling question here. If you can just take a little minute and click the radio dials. Does your practice have cyber insurance? Yes, no, or I don't know. We'll give you guys a couple of minutes, or a minute or so to answer this. It looks like about 78% do have coverage, and then about 20% are not sure what coverage is available. Thank you guys for providing some responses there.
So John, that's not really a surprising statistic that people either say no or they don't know if they have cyber insurance. What are you seeing in industry journals?
Well, one of the slides we have here shows some percentages of a survey that was done asking that question, do you have cyber insurance? It was done in 2018, and 24% of U.S. executives surveyed said their firm had no cyber insurance, and it was 50% in 2017, so that's a definite improvement. 32% of U.S. firms said their cyber insurance coverage covers all risks, and that's a misnomer. There's no insurance policy that covers all risk of loss. There's always going to be some type of exclusion. What's concerning to me is 26% of U.S. firms said their insurer based their premium on an accurate analysis of the risk profile, meaning approximately 75% didn't have a good understanding of the cybersecurity posture of that particular entity. And then what doesn't comport with our answers so far that we just saw is healthcare firms lag other industries, with 70% reporting they have no coverage. Of course, this is polling or surveying multiple types of healthcare entities, not just medical practices.
Sorry about that. So, John, can you talk a little bit about the importance of cyber risks?
Well, as it says in the slides here, companies are beginning to understand that cyber is an overall business risk and also a legal issue. It actually has to be a part of financial contingency planning today because it's so pervasive and the threats are so sophisticated, and it's happening daily. In moments and minutes, every day, thousands and tens of thousands of attacks are happening throughout the world. And to effectively manage cyber risk, companies must first understand the real cyber risk, meaning that they not have to do a risk assessment, identify what those risks are first and foremost, because you can't mitigate, avert, or avoid a risk such as a cyber threat unless you know what your vulnerabilities and weaknesses are. In the process of assessing a company's overall cyber risk is one of the most crucial steps today in risk management processes, because companies are all interconnected, doing business on the internet and sharing data with others.
So let's jump right into what is cyber insurance. Just an additional disclaimer, we are focusing on TMLT's cyber insurance coverage for our policyholders. If you are not a TMLT policyholder, your coverage may be somewhat different.
This is a great question because a lot of people don't understand what cyber insurance is per se. It's a non-standardized form of professional liability insurance. All the coverage forms are proprietary and they differ in some aspects from one another, making it difficult to compare and contrast.
And on this slide, it's just the link if you are a TMLT policyholder and want more information about the coverage. It's a link to our website. And I know this is a very busy slide. It's just a snapshot of TMLT cyber insurance coverage. And John's going to go through these in a little more depth throughout the presentation. So John, I know in our conversations you always talk about key coverage definitions. Would you go through what you consider the 3 most important coverage definitions?
Yes, cyber insurance policies have numerous definitions, but 3 of them that are pretty important, and they may be named differently in different policy forms, but in ours is a privacy breach or a breach committed by the policyholder or by others acting on behalf of the policyholder for whom the policyholder is legally or vicariously responsible, including its service providers. And a security breach is unauthorized access to or unauthorized use or infection of an insured computer system, which includes a system not only owned, operated, or leased by the policyholder, but also by a service provider, like a cloud service provider or somebody storing your data in the cloud that provides hosted computer application services or processes or stores the information, like a CSP or a cloud service provider. And then what triggers the coverage? 3 of the covered causes of loss, and they're broad, is accidental damage or destruction, administrative or operational mistakes, and computer crime, which is on the increase, and computer attacks.
So John, let's specifically look at TMLT's cyber insurance coverage that all policyholders have.
Well, all of our policyholders have, individual physicians have $100,000 each claim and $100,000 in the annual aggregate. And if it's an entity being insured, the practice being insured, it's $100,000 each claim and $500,000 in the annual aggregate. The constituents or components of it are first party and third party. The first party coverage, and most important, is the privacy breach response costs, which I'll talk about a little bit later, which includes proactive privacy breach response costs and voluntary notification expenses that you may voluntarily offer to pay to mitigate a claim, even though it's not required by a regulatory body. Network asset protection, which we'll talk about. Cyber extortion, we'll talk about that as well. Cyber terrorism, the differentiation between that and cyber extortion is an act of cyber terrorism doesn't usually involve any ransom demand or a request for monies. It's an ideological attack or idealistic attack to try to harm, physically harm, or cause property damage to an entity. And then Brandguard, which is a form of business continuity that we'll talk about. And the third-party coverage, which is what a lot of people worry about, is third-party liability for your legal liability to others, is multimedia liability, security and privacy liability, privacy regulatory defense and penalties, and payment card industry data security standard assessments and fines, which we'll talk about as well. These are all embedded in the TMLT medical professional liability policy.
Thanks, John. What is covered under that broad category of privacy breach response, patient notification, and credit monitoring expenses?
It's a great question. If you have a data breach, and particularly if it's a data breach over 500 records, which has to be of protected health information, it has to be reported to the Office for Civil Rights, the enforcement arm of the U.S. Department of Health and Human Services, and within 60 days. So you're going to definitely trigger this particular coverage in that particular situation. It pays the expenses to notify the affected parties, patients, for example, whose data has been breached on your behalf or on the behalf of somebody that you've agreed to vicariously defend or protect. It includes the legal fees to hire a privacy law attorney, credit monitoring for up to 1 year, the IT forensics costs, which can be quite expensive, call center costs to hire a call center to help you answer patient questions, and advertising and postage expenses. And it also would pay the cost to employ a public relations consultant to help mitigate reputational harm.
So this is an example of what those actual costs can look like. Is that correct?
That's correct. Typically, what we're seeing in our claims experience is 40 to 60% of the total cost of a data breach are going to be derived from these coverage elements. The legal fees, this is a range from $5,000 to $50,000. Call center costs to hire that call center. The IT forensics, up to $100,000 or more. We've had some policyholders that have actually exhausted their policy limits just on the forensics costs alone to determine if any data had been exfiltrated and the causation of the breach. Credit monitoring, $10 to $30 per person that signs up. Customer notifications, $1 to $3. For example, the Anthem data breach with 79 million records. If you just took $1 record, that was $79 million just to provide that benefit to the patients that were affected. And public relations, $5 to $50,000. They can all add up.
So let's dive into a little more of the coverages. What is network asset protection?
Well, network asset protection is a key coverage because it covers your intangible personal property, which is your data. And it's considered intangible because you can't really physically touch it. And it covers it for certain covered causes of loss to restore, repair, or reconstruct that data if it's damaged. Covered causes of loss are, we've already mentioned them, accidental damage or destruction, administrative or operational mistakes, the handling of that data, computer crime, and computer attacks. But it also importantly covers a loss of a business interruption loss, the loss of net income, plus continuing expenses, plus extra or extraordinary expenses that you incur to mitigate the interruption.
What is covered under cyber extortion? Because that one just sounds so scary.
This is an area that we're seeing regularly, weekly, ransomware type claims. Cyber extortion is broader than just ransomware, but the most common type of claim we see is a ransomware attack that's asking for a demand to unencrypt data that's been encrypted and asking for usually in cryptocurrency or bitcoins. So this coverage pays for cyber extortion expenses or monies as a direct result of a cyber extortion threat, for example, a ransomware attack. The expenses that you incur are reasonable and necessary arising from the cyber extortion threat. The money is itself the ransom demand, that the funds that you have to pay to get your data back. And what is a threat is a credible threat is a ransomware attack, including but not limited to a demand for cyber extortion monies. So these are all just components of really what a cyber extortion claim is. And it's not only that, but it's also releasing confidential information of a third party, the threat of having to do that, the introducing of malicious code, corrupting, damaging, or destroying the data, restricting or hindering the system access, including a denial of service attack, and electronically communicating with patients or customers claiming to be the policyholder in order to obtain personal or confidential information. You don't go out and just offer the money on your own. You have to get the approval of the insurer, TMLT, before you offer any sort of payment in terms of trying to get a ransom demand paid.
So another topic that is covered under our policy is is cybercrime. Can you talk about cybercrime?
Yes, we're seeing a big uptick in this area as well. Financial fraud loss, which means your loss of money or securities directly caused by financial fraud. Well, financial fraud, as is shown in the slide, is an intentional, unauthorized, or fraudulent instruction sent to a financial institution asking them to withdraw or transfer your money from your account to a third party who's really acting or impersonating a client, vendor, executive, or employee. Somebody that for example, an accountant receives an email from the CFO or CEO, and it appears to be legitimate, asking for a wire transfer of $20,000. They don't investigate this further. They don't do a callback or transfer verification, and they send that money off, and it goes to Hong Kong or China, and they won't be able to get that money back unless they have this coverage. We will reimburse them for that loss. Bottom line, cybercrime is the theft of money or securities from your bank account or credit cards by misleading or deceptive electronic means.
So let's talk about the direct costs of cybercrime.
Excuse me, some of these numbers are actually staggering. In 2017, the average loss for a cybercrime was $116,697. That's a hefty sum for most small and medium-sized organizations. The most common method to steal it is a phishing attack. You want to describe what a phishing attack is?
So a phishing attack is where someone sends you a legitimate looking email in most cases and tricks you into either giving up your credentials into your network in some cases, or clicking on a link that actually downloads a malicious software, and then they can actually get those credentials on their end of the software.
Well, 62% of all cybercrime claims reported were caused by phishing, with an average loss of just under $100,000. So wiring money to a third party, which is a very common business practice today, is really being sabotaged by cyber criminals through particularly spear phishing attacks, which is a form of more targeted phishing to individuals that have authority to make those kind of wire transfers.
And in fact, like you said, John, we're seeing this not just in healthcare, but a lot of industries are being hit with this,
industries, yes.
with cybercrime. So let's talk about Brandguard.
Well, Brandguard is a form of business interruption or business continuity coverage, but it's specific to brand loss, where an individual loses some reputational harm or suffers a reputational harm because of an adverse media report. So in the example I gave earlier about over 500 records and reporting it to the Office for Civil Rights, you also have to report that to the 2 most prominent local media outlets in your area. So and patients get their notifications and they hear it in the news. You may lose patients, existing patients, or new patients decide not to come to your practice because they don't trust your data security. So if you can show that you suffered a loss of revenue but for that cyber attack, then you would find out through forensic accounting how much that might have been, so that they would reimburse you for the loss of your net profit and pay any other income that you might have received from substitute methods, including fixed operating expenses, to the extent that those operating expenses must continue.
So it sounds to me like anytime you have a cyber attack or a privacy or security incident, you really need to keep really good notes, and especially when those expenses come in, have accurate records of those expenses.
This type of a claim involves accounting because it has to show what your trending, where your revenue was trending, and how was it just months prior, and what was it like in this time of the year going forward.
So let's switch gears and talk about third-party coverages.
Well, this is the area that can cause great concern because you have caused injury to somebody else. So a third party files a claim resulting from your legal or vicarious liability to others. And the coverage agreements or insurance agreements that are included are multimedia liability, which talks about libel, slander, defamation. We'll talk about this in another slide. Security and privacy liability. Your network security is inadequate or is not up to snuff. As a result, your data has been corrupted or stolen, or it infects other people's computers, and they're filing claims against you because of that. Privacy, regulatory defense, and penalties, regulatory fines, we'll talk about that, and PCI, payment card industry data security standard assessments. We'll also talk about that in just a moment. So we just mentioned multimedia liability. This is covering liability claims arising from the dissemination of media material, your communication materials that you're responsible for. It can be electronic or non-electronic media material that results in defamation, libel, slander, mental anguish, invasions of rights of privacy, which is typically in dealing with a data breach, and plagiarism and infringement of copyright, trademark, or domain name, including negligence in that media material. An example was we had a plastic surgeon who had been posting pictures of a woman's breast reduction surgery on his website for 3 years, and this particular lady a friend said, Google your name, and she Googled her name, and she could see these pictures, and she did not give consent to those photos. And she hired an attorney, and we had to settle that case because of that reason, and that was under the multimedia liability coverage.
And there are ways to actually protect the patient identity if you are posting before and after pictures. But you need to make sure that those protections are in place.
That's right, and have the consent.
Consent is always important. So what is the privacy, regulatory defense, and penalties coverage?
Great question. For example, you've reported a claim to the Office of Civil Rights. You get an investigation letter from them. It's over 500 records, for example. And they investigate, and they determine because of your deficiencies in your cybersecurity, and you didn't do a security risk assessment, which is mandated under HIPAA, for example. Then they decide to fine you because of that, or have a corrective action plan put in place, and maybe even civil money penalties. So it's a result of a privacy or security breach and investigations and leading to violations of federal, or it could be state or local. Some of the state attorney generals in some of the states are also pursuing these cases. And it's violations of HIPAA, the HITECH Act, the Texas Medical Privacy Act, which Texas is Texas' state law for privacy actions, and foreign laws, including the European Union's GDP regulation, dealing with their citizens that come from their country that might come here for medical care.
Very good. So often I hear that doctors don't think they have to meet PCIDSS assessments or liability requirements. Can you describe what this coverage is?
Well, frankly, if you take credit card holders' information, you're a merchant, and you would fall under the PCIDSS standards, which are a whole different set of standards than what HIPAA might have. And you could be assessed a fine, a penalty, or basically told you can't use Visa or MasterCard anymore until you make these corrections, and they may also fine you as a result of a point-of-sale kind of hack or somehow getting that cardholder information and it's breached because your system's not up to standards. So that falls under the payment card industry data security standards and the card issuing company rules.
I know that this one is not necessarily applicable to everyone, but are all practices. But let's talk a little bit about what technology errors and omissions is and how a practice would know if they need it.
Well, what I have seen in my experience is when I go out with some of the underwriters and go into the field is some of the medical practices have IT people and they have IT resources, and they're using those resources and selling them to others for a fee, to other practices. Well, if they're doing that, they're also a technology firm, and cyber liability coverage, cyber insurance, doesn't cover technology errors and omissions. And usually they're doing some type of computer consulting, data processing, software programming or development, hosting, managing, or administrating the computer systems and the infrastructure of others. So those products or services can cause errors and omissions in the rendering or failure to render those services, just like in a malpractice case, the failure to render or in the rendering of medical care. But in this case, it deals with technologies. And the financial loss can arise from the failure of that service or product to perform as intended, resulting, for example, in a business interruption at a particular business because it's not working and now they can't do their billing or make patient appointments and things like that. So cyber liability insurance does not cover technology E&O claims unless it's actually been endorsed or specifically included. TMLT's cyber liability coverage does not include technology E&O.
So certainly if you think you might fall into this category, this would be something that you would want to check with your carrier or TMLT if that's the case to make sure that you do have that coverage.
Yes, because I have doctors call me up and they're developing an app, for example, or some kind of technology, and they want to sell it to other medical practices. Well, that is a person that needs technology errors and omissions coverage as well as cyber liability.
So why should I ask my IT vendor and software vendors for proof of their cyber insurance, and especially including technology errors and omissions?
Well, what we're seeing is a lot of contracts that doctors are signing, and in those contracts they hold harmless and indemnification provisions or clauses where a doctor is agreeing to hold harmless and indemnify another entity or vice versa. And that shifts all or part of the financial consequences of a loss to that other party. And it's found in a myriad of contracts, including website privacy statements, privacy policies, and service level agreements. So you have to check those out with your legal counsel to be sure that what you're signing is acceptable to you. And particularly when they ask for particular insurance requirements, they may specify certain limits of liability and certain coverages. Do you have those limits of liability and those coverages? Because if you don't, you've actually agreed contractually to provide it, but you don't have the financial backstop of the insurance policy to be there in place in case you need to use it. And should always ask their IT vendors to maintain or provide evidence of their cyber insurance and technology errors and omissions, because they can screw up. Vendor negligence can happen before you sign on a contract. And I have a great example if you want me to talk about it, if we have time.
Sure.
Yeah,
give us an example.
There was a federally qualified healthcare center that was hacked when he got a call one day saying that somebody had gone onto their website and was trying to download PHI through their patient portal information that they had. And what they discovered, and they shut the website down, was that their web developer, independent contractor, had somehow put out into the public domain a compressed data file. And so they investigated that through forensics to determine the cause of, and the responsibility belonged to the website developer. And when I got a call from the group asking me, what do we do here? We filed the claim. The question I had for them was, do you know if this vendor, this website developer had cybersecurity or cyber insurance and technology errors and omissions insurance? And they said they did not know that. Well, lo and behold, they didn't. So we couldn't make a recovery from them due to their negligence because they did not ask that question. So going forward, they said they will ask it from now on of every one of them.
And I think that, especially smaller practices put a lot of trust in their IT vendors.
Right.
And they may have had long-term relationships with them. So we certainly would want to try to help them understand how important this,
Right.
getting that proof of coverage is.
Absolutely. If you want a certificate of insurance to show that they have the coverage, and if possible, to have you named as an additional insured, so that you have a right to file a claim directly if they're negligent in causing a breach.
So, John, we've talked a lot about what coverages actually exist on TMLT's policy, but let's talk briefly about the potential direct and indirect costs of a cyber attack.
This is a key slide. If you retain anything from this presentation, this particular slide is important to look at the particular cost elements that can happen when you have a data breach. There are direct costs, for example, the legal fees to hire the privacy attorney, the forensics, which I said can be very expensive, as well as the data restoration. There are notifications and credit monitoring, which is usually the majority of the cost. Public relations and media releases, the call center support, regulatory fines and penalties, third-party liability and damages, and you may have to do some software and equipment upgrades. Those are all direct costs as a result of a cyber attack. And we're seeing these can really add up and exceed the 100,000 limit. And then the indirect costs are the loss of income, business interruption expenses, diminished goodwill and reputational harm, that loss of revenue as a result of that. Now, one thing I forgot to mention is that under the provision of cybercrime that we talked about, a financial fraud loss, that's not available in the embedded. You have to purchase the buy-up coverage that TMLT offers, which has limits of $1 million to $3 million, and actually broader coverage, which we highly recommend to include in your financial contingency planning.
And just as a little bit of a teaser, John, next month you're going to come back and be with us, and we're going to be talking about what are the potential costs of cyber risks.
Right.
And so I suspect we'll be seeing a deeper dive at that time.
Yeah, we'll go into more depth about the business interruption exposure, for example.
Well, we would like to thank you all for attending the webinar today. You will receive an email with the link to the recorded webinar, as we mentioned earlier. Also, if you look in the lower left pod, there is a download of today's presentation. Please feel free to download that. If you have any questions, please post those there in the Q&A pod, and we'll give a couple of opportunities for any questions if you have any. If not, we look forward to seeing you at our next webinar, again, as Kathy mentioned, again with John. We'd like to thank you, John, for being with us today.
Thank you.
So, John, one thing that I don't think maybe we touched on quite strongly enough is the importance of notifying the cyber insurance carrier
Yes.
as soon as you have an incident, because there are, first of all, you're required to notify,
Right.
and there are time
covered.
limits. Right, yeah, if you want coverage under your policy, there are time limits on those policies. And it also opens up a whole variety of resources.
That's correct.
And you're not the one out trying to find a forensics IT specialist. You're not out there trying to find a cyber attorney and those types of things.
Right. If I recall, we recently had a claim involving a ransomware attack where the husband of who's the IT person in the group was looking to try to find out how to buy bitcoins. Didn't even know that they had cyber extortion coverage, and had not reported the claim to us at the time. And there's notice requirements, so you can actually have a carrier deny a claim if you don't notify them within the prescribed timeline from the date of the incident, which can vary among policies.
I would just, I know I don't see any questions popping up, but I would just remind you all that you can always email consulting@tmlt.org. It doesn't matter if it's today or if in a week you come up with a question about cyber. And we're certainly fortunate here at TMLT to have John as a resource and an expert on cyber insurance. And so if those questions involve cyber insurance, we can certainly pass those on to John as well.
Again, we thank you for joining us today, and we look forward to seeing you next month. Everyone have a great day.
Thank you.